Hey guys, Craig Beggins here. I had a really cool experience the other day. I met a mortgage broker from another company. He moved here from New Jersey. He's living in Lakewood Ranch, Florida, and absolutely loving Florida. And he's got a passion, and this sounds corny, so bear with me. He's got a passion to help 10,000 people become real estate millionaires by the time they retire. And I'm like, that's really cool. How does that work? He says, well, I'm going to teach people how to buy investment houses with a formula that proves that they're going to work and cash flow properly. And I'm going to set them up with a loan that they can prepay or that their tenant can prepay. And then I can teach them how to use the equity from that home to buy another home. I said, okay, tell me more. He says, we're in a unique position now because most every homeowner currently has a bunch of equity, which is like having gold buried in the backyard. And if your equity is not being used for you, it's like being buried in the backyard. It's not growing. So let's say you have a $300,000 house that's now worth $600,000. And let's say you had a big mortgage. You had a $300,000, you still have $300,000 in equity. So you can go to a local bank or a credit union and get what's called a HELOC, a home equity line of credit. And they'll lend you, based on your qualifications, $100,000 maybe. So now you got $100,000 in cash. You got to pay interest on it when you use it, not until you use it. But it's a good idea to have a HELOC anyway. But then you find with your agent an investment house that maybe it's $250, and you need 20% down. That's 50 grand. So now you have 50 grand in your equity of your other house that you can use as a down payment to buy a second house. So now you buy the second house for $250. You put 50 down, so you have a $200,000 mortgage, and that's going to be, even at today's interest rate, it's only going to be about $1,600 a month. Well, that house is going to rent for $2,200 or $2,300 a month. So you're going to make $600 or $700 a month in profit per month on the house. And per this guy's plan, you invest that profit back into paying down the principal faster. And if you do that properly, and there's a formula behind it, we end up paying off that house in 20 years. So let's say you're 45 now, and you do this plan, and by the time you're 65, the house is paid off. But the house that was $250, 20 years from now, what do you think it's worth? $400, $500, probably. The rent's gone up every year. So now it's $2,800, $2,900, $3,000 a month. So 20 years from now, you're getting $3,000 a month from that one house, and it's free and clear, and it's worth 600 grand. So back to age 45, we save some more money, the house grows in equity, we get a bigger credit line, we buy a second house, or we pull equity out of our first house, or refinance it and get the cash. We buy two, and copy paste, we buy three. So the strategy says you buy 3 investment homes. So in your 40s, by the time you're in your 60s. Now imagine if you were in your 20s, and then you have this by the time you're in your 40s. That's pretty cool. But this is not a fix and flip, buy and flip. This is a long-term hold investment strategy using real estate, using your real estate to make you rich. It's a fascinating class. We're going to have a public meeting on June 21st. Ask your agent. We'll keep you posted with the details. But it's a fascinating strategy, and you don't have to do anything. But if anything, you probably should get a home equity line of credit just in case you have some emergencies pop up. But if you want to use your equity to become a real estate millionaire long-term, you'll be interested in this class. Hope to see you there.